Hey everybody, it's Wayne. Thanks so much for tuning in. Let's get you a portfolio update. Apologies in advance. Last week I had every intention of pushing out a portfolio update for last week, and time just got away from me. If you're new to the channel, I do like to push out these portfolio updates at least once a week where I give you a rundown, a summary of how both of my portfolios are looking. That's going to be Robinhood as well as M1. I give you a rundown on all the dividends received for that week. And I'll also give you a rundown on the premium that I was able to generate from selling covered calls as well as cash secured put. Let's go ahead and jump into the Robinhood side. You can see here for the week, I am down just about a half of percentage. That's about $2,000. For the last month, though, things have been on a solid upward trajectory. I'm up about 2.5%. That's about $10,000 in the last month. And things are looking even better at the 3-month range, up about 12%. That's about 41,000. However, it is important to know if we look at everything in totality, I'm still down nearly 5%. That's nearly $20,000 that I'm still currently in the red. I'll tell you right now, I already know the biggest culprits. It's going to be Tesla and Amazon. I'm hoping this year, maybe next year, I will break even on both of those positions and I will sell off. I think it's 613 shares of Amazon and I own 300 shares of Tesla. But in the meantime, you know that I've been selling covered calls, trying to really eat away at that deficit. And so we'll give you an update on that. One thing that I want to point out as well, within Robinhood, I am daily cost averaging Monday through Friday. These three stocks right here. And the newest addition, besides UPS and Costco, is going to be Aflac. And I hope sometimes in the foreseeable future, I'll be able to get you a video as to why I think Aflac is going to hold a nice place in my long-term hold stock. So Aflac, I just started contributing $10 Monday through Friday. Costco, as you know, I am trying to build up to 100 shares. That's going to take me some time, but I am contributing $20 every day, Monday through Friday. And then UPS, I'd also like to see that 100 share count so I can start selling covered calls. And currently I'm contributing $10 per day. As you know, I mentioned this a few weeks ago, I'm really a big fan of Robinhood. I subscribe to Robinhood Gold, which is $5 a month. One of the biggest benefits is the interest that they are paying. And you can see here with the Fed's last interest rate hike, that also affected my APY on Robinhood Gold. So I am earning a very cool 4.4%. You can see here lifetime interest earned $250. And so far right now, I've earned $7.27. It's interesting because sometimes they pay out this interest twice a month. Sometimes they pay it out once a month. Remember though, it's only going to earn interest on the cash that you have uninvested in your brokerage account. In my situation, I am selling cash secured puts. If we take a look here at my investing tab, you will see here that I actually have nearly $30,000 in brokerage cash. You go back over here, well, why is only $4,800 earning interest? Remember, if any cash is tied up in a cash secured put contract, Robinhood's not going to pay you interest on that money until you are free and clear of that contract. So stocks and options, I'm holding about $363,000. Brokerage cash, I'm just under $29,000. That number kind of fluctuates because I do pull money from my brokerage account to pay a couple of bills, taxes being the big one. I will sometimes also pull cash out if I want to invest in a stock that's in my M1. So this number will fluctuate quite often. And obviously, I'm also selling cash secured puts as well as covered calls. So I may buy positions or I may buy to close positions. That's always going to fluctuate. Let's give you a quick rundown on my top 3 performing stocks in my Robinhood. You guys can see here Microsoft, Apple, and Starbucks. I am really happy because these are definitely going to be in my portfolio long term. Take a look here at my cost average on Microsoft, in which I own 201 shares. Average cost $246.75. Microsoft has had a rather impressive run up these last 3 months. Currently, the share price is $291. That puts my profit or unrealized profit right around $9,000. And I'm also selling covered calls against Microsoft. Also selling calls against Apple. But I'll tell you, I choose very conservative strike prices on Apple because I do not want to part ways with any of my 200 shares, and a lot of it has to do with my fantastic cost basis. I think it's my fantastic cost basis. You might have a better cost basis, but mine's $135.99. You can see here the current share price is $164, so I'm up about $5,700. Take a look here at Starbucks. Starbucks has also been in my portfolio long term. My cost basis is $78.74. Starbucks has also had a steady increase in share price the last couple of months. You can see here they are $104.68, so that puts me at an unrealized gain of just about $2,600. So not too bad. Let's go ahead and break down the biggest losers, because you can't talk about the biggest winners without the biggest losers. And as I mentioned earlier, Tesla and Amazon by far my biggest losers. Take a look here at this average cost on my Tesla shares. I own 300. And again, I didn't buy these shares on purpose, I guess you could say. I was assigned these 300 shares via a cash secured put. So you got to be careful. If you are going to sell options, that's always the risk, right? The share price could go down and you could be assigned 100, 200, and in my case, 300 shares. So I have a not so great cost basis. That's okay, because even though I am down currently 27,000 plus, I am selling covered calls on a regular basis on these 300 shares. I hope to make, I don't know, maybe 5 to 15,000 this year. We'll see what the share price does. Amazon, I own far more, 613 shares. I don't think my cost basis is that bad, but admittedly, I was assigned, I believe, on 4 contracts. So 400 of these 600 shares was via a cash secured put. Again, what I do like about Amazon, it is slowly begun to go back up. Currently, the share price is 101.87. So, not too far off from my 126.71. But if we multiply that by 613 shares, I am certainly down quite a bit, nearly 15,000. But again, I am very optimistic on Tesla and Amazon. I do not, though, however, share the same optimism when it comes to Traeger. I have a very ugly average cost basis, 319 shares. Average cost is $14.38. This is one of those stocks where it might actually be in my benefit to average down by buying more shares. It's ironic because I want to get out of this position, but I think the only way to get out is to lower my cost basis, sell covered calls. Meta has also made a great comeback this last 2 or 3 months, and you can see here my average cost is $242. I actually recently just purchased, I think, 40 to 50 shares to get me up to the 100 shares, and I have been able to make some decent coins selling covered calls. So there you have it. There's a quick look on my Robinhood holdings. Okay, moving over to M1, you can see the portfolio currently stands at just over 119,000. If we look at the week, I am up about 0.30%. If we look at the month, things should be looking, they're actually not looking as good. I'm down actually 3.37%. If we look at year to date, I am down 1.35%. Again, I go back to, and I've had a few of you comment as to why it's important to know the difference between this portfolio view and the holdings view. The portfolio view will factor in contributions as well as earned dividends. So if we actually look at the holdings as a whole for all 45 of my positions in M1, I am down just under 4.75%. That's an unrealized loss of nearly 6,000. Once again, I'm okay with this number. I have every intention of buying quality, not quantity this year. So I'm actually glad that I'm able to buy some of these quality stocks at a discount. I'd like to see more red than more green in 2023. Some kind of cool news to give you an update when it comes to my contributions to M1. I made a decision at the beginning of April that I was going to increase my contributions. As you know, boy, if I were to go back all the way to, I think, January, I started things off with $50 every Monday, Wednesday, and Friday. That was a weekly total of $150. And then I think in early February, I was able to up that by $100. So Monday through Friday, I was contributing $50 for a total of $250. This past month in April, if we scroll down here and look at the history, you can see here, I upped it from $50 every day, Monday through Friday, to $100 every single day. I think the only way for me to realistically meet my 15K in dividend income is to obviously increase my daily contribution. So I am officially contributing $500 on a weekly basis. I'm very proud. I'll tell you though, it's not easy. By no means am I a wealthy person. I am currently maxed out on my deferred comp through my current employer. My wife is maxed out on her deferred comp employer. We put tons of money aside for our kids' college. We obviously have bills. So, I will say it is a little bit of a struggle having to part ways with $500 every week. I think what I'm going to start doing is a lot of the money that I'm able to generate by selling covered calls or cash secured puts, I'm going to start using that, maybe withdrawing that, because I truly am breaking the bank, if you will, by these consistent contributions. Let's go ahead and give you a rundown of what I purchased for the last week. So as you know, this past week was a shorter week because of Good Friday, so we only had Monday through Thursday for trading days, and things kicked off on April 3rd where I was able to make 10 buys. You'll see here it was for $871. So that would have been my $100 contribution on Monday, and then the remainder of that would have been earned dividends that I made the previous week that rolled over to that Monday. This right here is exactly the path that I need to be on, right? Contributing as much money as I can, coupled with the dividends that I'm making. And as you know, I am focused exclusively on my long-term hold slide. So these are going to be the stocks that you're going to see throughout the weeks, throughout the months, and I really, really want to build up a solid position in all of these. Let's go ahead and take a look here at Tuesday. Again, $100. And then whatever's left over would have been the earned dividends from the previous day. We have the same suspects here: Lowe's, Procter & Gamble, UNP, Texas Roadhouse, McDonald's, Visa, ExxonMobil, Esso, Johnson & Johnson, AVGO. So things also concluded on Thursday and Friday. I'm not quite sure. Oh, this is kind of cool. You guys get to see what I traded out. So I will tell you. Let's go back, actually. I want to go back here and I want to show you what the portfolio looks like. I had 15 stocks in my long-term hold slice. And these are currently the 14 stocks that I have. So I have removed a stock. I don't expect anybody to remember, but it was a decision that I did not take lightly, and it was Walmart that I sold off. So let's go ahead and go back to activity. Let's go ahead and give you this past week, and then we're going to go ahead and look at trading only. And that's why you see the 1 sell and you see 8 buys. So let's go ahead and look at what we sold off, and that was Walmart. I had nearly $500 worth of stock. Now, the nice thing about selling off my Walmart position is I was slightly profitable, and so I essentially rolled over all of that money, and I did buy, you can see right here, I did buy about $497 worth of Horizon. Now, Horizon is a monthly payer, and a couple of months ago, if you do remember, I was talking about the dividend that I receive on a monthly basis is $68, and I wanted to bump that up to $70, right? I wanted to reach that next sort of $10 increment. So I went from 60 something to 70 something. I love Horizon as a monthly payer. And again, I haven't contributed to Horizon in months because all of the dividends that I receive from all of my monthly payers essentially get rolled over to my long-term growth. So I did sell off Walmart. I mean, there's really nothing more to it. I wasn't that impressed with that stock to begin with. It's one of those stocks where I felt like I was supposed to own it, right? Versus actually wanting to own it. And, I own a lot of other similar stocks in that space. I'd rather focus on what I think are more solid dividend payers. Target comes to mind. Costco comes to mind. Kroger comes to mind. So it was an easy decision. Walmart, every time I would see it in my long-term growth slice, it just was a stock that I did not want to own long-term. So I made the decision to get rid of it. Okay, let's give you a peek at all the dividends that I received this past week, beginning on April 3rd. You can see here, Coca-Cola paid me out $26.07. Walmart paid me its last dividend. Remember, I sold off this position, but I still made ex-dividend date. So I received my last dividend from Walmart for $1.69. VG Properties paid me out $39. I own 100 shares. JEPI and JEPQ also paid me out $45 and $45 approximately for JEPQ. I go back to, I still find it to be very interesting that JEPQ consistently has been paying slightly better dividend than JEPI, even though JEPQ has a lower cost than JEPI. So I actually think in the future, I'm going to add 100 more shares to my JEPQ holding. I like the cash it generates on a monthly basis. And of course, you know, I'm taking these dividends and I'm reinvesting them into that long-term hold slice. Let's go ahead and pivot over to Robinhood. Robinhood, I didn't see too much in the form of dividends, but Nike did pay me out 34 cents for the one share that I own. FedEx, though, paid me $17.28. And if I'm not mistaken, FedEx just released or just announced a dividend increase. So I am very happy about this. You can see the 15 shares that I own. They paid me out $1.15 on that. I am really happy about my FedEx holding. Kind of ironic because I hold both, right? I've got UPS as well as FedEx. And then SPSW, this is not really a stock I care for anymore. I'm just waiting to break even on my cost basis. But in the meantime, I did receive $24.07. And I also have some big dividends coming my way. Next week, I'm going to get my second dividend since owning Best Buy. So you can see next week, I'm looking at about $93. But that's it in the form of dividends. And last but not certainly least, let's give you a quick rundown on all the premium that I was able to generate this past month, really, because I didn't give you a portfolio last week, and I would have broken down what I earned for the entire month of March. But you can see here, to date, I have sold 237 covered calls. So far, premium earned is $8,523. I want to point out that I am beginning to sell more cash secured puts. It makes sense, right? If we're seeing an increase in the stock market, I'm able to make more money with cash secured puts because, again, we don't have the downward momentum. It's the opposite. Stocks have been doing rather good. That's not across the board, but a lot of the positions that I am selling cash secured puts on, the positions have been seeing an upward trend. So I want to go ahead and take advantage of earning, quote unquote, easy premium. So you can see here, I've really been aggressive on these cash secured puts on these newer stocks, actually. So TQQQ, SOXL, TNA. These have been very, very good to me. And so to date, I have sold 39 cash secured puts. I've made $3,089. So this yearly option premium chart has not been completed yet. So go ahead and take a look at this. I'm going to go ahead and input the numbers. You're going to see some heavy fluctuation even in February. Remember, if I write a covered call in February, but it doesn't expire until March or April, and I have to roll that out, that means technically I have to go ahead and include the loss or whatever I paid to either roll or buy to close. And so you're going to see some numbers really fluctuate. But before I show you the updated, you can see here, combined total, $10,033 for all of my covered calls and cash secured puts. And you guys know I'm currently running the wheel. So technically we have to also add in this $1,600. So right now, combined, right, covered calls, cash secured puts, before these updated numbers, I was at $11,652. Let's go ahead and input the updated numbers. Okay, and here are the updated number that includes the total number of contracts for both covered calls as well as cash secured puts. You can see here for covered calls in 2023, I have sold a total of 237 contracts. That has earned me $8,523. On the cash secured put side, I have sold a total of 39 contracts, earning me just over $3,000. That is a total of $11,612. But remember, I'm running the wheel strategy, which is nothing more than just me documenting this info on a separate Excel sheet. So this is going to total $1,619. That's for running the wheel on Celsius, Amazon, and now SoFi. So that is a new combined total year to date, $13,231 I have made in premium income. This is cash in my brokerage that I have earned. So I'm really excited about that. Obviously covered calls is going rather well. You can see here my monthly average is about $2,100, not too far below the total monthly average of covered calls that I sold in 2022. I also want to point out that I began selling covered calls in March of 2022. My first month, I made $765. So obviously, I want to always beat the month year to date. So April, I made about $1,000 selling covered calls. Let's see if I can finish strong. Right now, I'm at $4,100. Remember, anytime you hear somebody say, oh, you know what, I made $17,000 in the month of February. To kind of put that in context, if I were to say, hey guys, I made $17,835. Well, take a look at January, because the previous month I technically lost $21,000. And so that's why when I'm breaking down all of this premium that I earn, I kind of look at it on a total basis. I don't look at it just on the month, because it's very misleading in my opinion. So I am focused on covered calls. Yeah, I've made a total of $8,523. Obviously, you have to add in this versus just saying, hey guys, I made $17,000 in the month of February. So things are looking really good. Again, I love how active and how busy selling covered calls and cash secure puts keeps me. But don't get me wrong, I also love just earning that passive dividend income. So we'll get you guys a monthly total on the next video. I think April is going to be a solid month. Not as strong as March, but I also want to focus on those monthly pairs, which makes these down months more exciting, because I'm at least receiving $350 to $400. So again, I appreciate you guys hanging in there. It is a long video. I wasn't able to get you an update last week. I hope this made up for it. I hope you guys are staying motivated. I hope you're daily cost averaging. I hope you're not paying too much attention to whether or not you had a great week or a down week. Everything just factors out in the long run. So we'll see you in the next video. Thank you so very much.